I was thinking, how do we make mortgage rates come down? Is there any way that the banking association could turn loans into assumable loans? So let's say Lee has a $300,000 mortgage, and there's 100,000 left, or she's got 100,000 equity, and there's 200,000 on the loan itself. If I came along and wanted to assume Lee's loan, and obviously my interest rates and my credit is good, everything in the background check works, could I just come up with the difference in cash? Let's say Lee's selling her house for $350,000. Could I come up with $150,000 in cash and then assume her loan at the, in theory, 2.5 or 3% interest rate, and then my second loan will only be for the 8% or whatever the going rate is?
Great question. Even on VA, if you're not VA approved, if you're not a veteran, you can assume a VA loan, and it is difficult, but yes, you can do that in the exact. So we don't go too long-winded on the radio show and go to all the different calls. Exactly what you said is exactly what you do.
You can. So it has, but the loan has to be assumable.
And a lot of them has to be assumable. Most every loan is assumable now, but the problem is it usually gets into too much detail and too much work, and a lot of people don't go through that. So, but you can assume most loans, yes.
All right, so folks, this is a way around this problem with the interest rates, is to find a house where the loan could be assumable. There has to be some certain conditions, and your credit has to be able to be high enough to assume the loan, but it can be done. Yeah.
Right. And you could get a second mortgage on the house and then only have to bring certain amount of money to the closing table. So in your example, you'll have a home equity line, your second mortgage, or a fixed rate at a higher rate.
Yep.
And then bring a little bit more less to the closing table than bringing just cash.
Maybe we need to just talk more about that down the road. I think we do. We'll do that.